In this video, how to draw and trade trend lines. How do we get these on the chart and how do we actually go ahead and place orders around them? So firstly, two examples, an uptrend and a downtrend. An uptrend is where you clearly see that the price is making higher highs and higher lows over time. The trend line that we draw is to the lower side of this as a support level. So each drawdown or pullback in the price reaches a higher level, and that is the trend line that we draw. So I'm going to draw a ray like this. I'm going to start off at the start of this trend right here at this point. We're then going to draw that and try and touch at least 2 or 3 times on this trend. Now, price action isn't perfect. So as long as you fit this trend and you can see that the price is drawing down into it, I think that works. Now for me, I'd usually draw on the body of a candle and not the wick. That's how I was taught when I got my first trading job. So I still do it now. However, like I said, trading charts isn't absolutely perfect, but we can fit this line on. So we can see this one start. We had a drawdown into the trend, draw down into the trend, draw down into the trend. If we still believe the price is in an uptrend, then of course the price will still continue to bounce from this trend. And it does here, moves higher, comes in here, and actually bounces around and still moves higher on that trend. So of course, where we come into this trend, these are trading opportunities to buy if we consider the price is still moving within its uptrend. We can do the exact same thing for downtrends where the price is actually moving lower, and pullbacks on this occasion are actually to the upside. So what we're actually trading right here is a high point, and we can see the next pullback in this downtrend is to the upside and gets rejected. So pullbacks are actually to the upside in a downtrend because you have a down move, you have a pullback to the upside, and then you expect to reject lower, which we got here. So if this trend continues and we've got 2 very clear touches here, maybe a third touch will actually be tradable, come into this trend and then reject off. And that's exactly what we get. So we get this point right here, and we actually reject off of that to a new low right here. So that trend to the downside, we draw the trend line above as resistance moving down. Let's go through an example of an uptrend that we can see playing out, draw the trend line on, and then see if there are any opportunities to trade pullbacks on the larger trend. So we have a cryptocurrency here, which has been trading sideways for many, many months. We eventually get a breakout, which seems to be the first time that this price has actually broken out to the upside. So if we look at this trend, we can actually try and trade this on. So what we get is a clear uptrend here. Now it's very strong as well. So we're going to draw our ray on. We're going to draw the touches that we see. So this is clearly the level of the uptrend, right? So if we draw this on, we can see we get these touches, move up, down into the trend again. We get move up, we get down into the trend again. So where do you want to trade this? Clearly, when we come back into the uptrend, this is where people are buying. The price is expanding. You get some profit takers down into the trend. The buyers come back in. So at any time, we want to actually trade any of these pullbacks. Now, you're not going to trade the first few pullbacks because you're going to wait to see this trend play out. So maybe we trade this pullback right here. So we can go on to actually have a sample long position. So I'll just show you on TradingView right here. TradingView is free. I highly recommend it. I'll link them below. You can set up an account like this and use it for free. I'll link the trading platform I use, which is Bybit, down below as well. You can get $30,000 deposit bonus if you trade on there. So check the details down below. But we can enter a sample long position here. So we'll enter a long position when we come into this trend. Where do we put our stop loss? Probably at the last support and resistance level. So you can see this price right here. This was a resistance level, and that's probably a good point to put our stop loss if the trend breaks down. And then a take profit will be somewhere above the last range high. Now, I would suggest you want to hold on to the position for a decent time. And if you're in a bull market, hey, why would you sell? If you're still in a bull market, you just keep the position. But you can have some sort of profit target, for example, a breakout of the previous range high by 10, 20%, something like that, if you're trading short term. Short term, you definitely need a stop loss and to put that in, and some sort of take profit. If you're just trading for a cycle, you're looking to hold for uptrends, then you just buy and accumulate when you get the pullbacks and just wait until the bull market actually plays itself out. That's up to the individual. So it's something like that to actually play out. And you can see what happened here is that the trend continued. We got touch after touch after touch right here where buyers are coming in. So obviously our profit target was hit here. That would have been a good trade. And of course, if you're trading short term and taking profits early, then hey, you may miss out much bigger trends. But like I said, you either trade short term with a stop loss and a take profit with defined prices, or you just hold for the rest of a bull market if you think you're in one. When trading trends, time horizons also matter, because you can trade over short time horizons, which will be that straight line trend. However, on assets that have secular growth and are growing from small to large, you can also use logarithmic charts and actually use curve trends. And again, it's the exact same thing. We're looking for pullbacks towards the trend. Those are areas to buy if the trend continues. So I'm looking at Bitcoin on a logarithmic chart, which crushes the price scale at the top, which is a much better way to look at something like Bitcoin, which is a network rather than, a company. And so what we can see is a trend in the adoption and the growth of the asset. So what I can do here, instead of drawing a straight line, which isn't going to work for something like BTC, you can draw a curved trend line like this, which follows the logarithmic regression of the price growth of BTC. Now what we can do is put other trend lines on there to make areas where the price, may be trading to the low end of its range. So we can see the price moves up and has pullbacks over time. Now, again, if you're trading trends, what do? Well, if we're in an uptrend, which this clearly is, you buy pullbacks towards the trend. So just very quickly on the chart, we can see there are pullbacks, right? So if you trade these pullbacks towards the trend, it seems to bounce from these levels. These are actually the last 3 bear markets, and obviously the best time to buy BTC. So you can see the trend, you identify the trend on a chart, you can chart that trend with lines and see where the price draws down into them. Those are buying opportunities within uptrends. Like I said, time horizon does matter. If you're trading short term over weeks, months, maybe even a year or so, straight line trends are going to work. If you're trading assets over much longer time frames or looking for assets with secular growth to invest in, you can use logarithmic charts, which really are for trading over multiple years or cycles, maybe 4, 8, 10, 12 years. But you can still see these trends work to identify areas where prices actually come back to the trend and are decent buying opportunities if you believe the trend will continue. We can also trade trend breaks or reversals, where the price actually reverses from the trend that it's in, breaks through the trend line, and then actually moves in the opposite direction. So a key tip here is to actually wait for the price action to confirm the move before you actually trade. So if you're in an uptrend like this, we can, of course, trade the pullback as and when it comes into the trend line, but we can also wait for a little while until the price actually does reverse and we get that confirmation. We get in at a slightly worse price if we're trading that uptrend, but the price action is confirmed. Now we can do that with trend reversals as well. So this is clearly a downtrend right here. As we can see, this is the Bitcoin price hitting an all-time high and then entering the bear market. That was the end. And then we have this reversal, we have a low, we have a lower high, and we move down. But the next time that we come into this trend, things are a little bit different. So a lot of people may actually trade that right here with a short position, taking the touch immediately and taking some sort of profit target a bit lower and putting the stop loss somewhere near the previous range high. Now that trade wouldn't have worked out because the trend was reversing, right? If we waited to actually see that, we would have seen that the price did come down here, but it didn't really move too much like it has previously. That shows that the price action is starting to run out of steam. As we reverse, we clearly reverse from this trend, right? So we're not carrying down with this price action anymore. And we clearly are reversing and going into some different trend. In fact, you can see the trend is pretty much to the upside at this point. So that's a reversal that we can trade and actually identify that with the trend line that we're drawing, that, hey, this asset is potentially going into a completely different price action right here, which was the uptrend. So we can trade reversals as well with those trend lines. Another tip is to look at the actual price action around these trend lines as well and how it's performing to determine if the trend will carry on or whether a reversal is in place. So we can see that, we can wait for confirmation and then make trades. So for example, we do have a clear downtrend here on the NASDAQ. As you can see, it's moving down again. And again, this time we come into the trend line and we do reverse down. So if you were trading short term there, ultra short term, that was a trade opportunity. However, what we can see here again is that the price action is showing a potential reversal. For example, we have a low here and we have a low here. But as we come and reject off this, going down into the downtrend, this is not a new lower low. This is actually a support point right here that has been printed. You can very clearly see that this price action has now created what's known as a double bottom or a triple bottom, because we have 3 touches, 1, 2, 3, where the price actually rejects to the upside and doesn't move lower. This is showing us a potential reversal of this downtrend where buyers are saying, this is our level and we're going to buy everything here. Then we get the break. We get the break of this trend, which is a reversal. Now, you may not trade this because, of course, it can move lower again, but we get the break and then we get the retest. You can see the sell-off here as profit takers come in who maybe traded this reversal, profit taking here. But of course, that's an opportunity for us to actually trade as well. So we can trade this reversal here and see if we move up again. So we got the reversal, we got the profit taking, we got the confirmation that buyers are coming in. We pushed up to a new higher high, as you can see here. So this is a potential where we can go in this level here and actually take long trades. And then if you're trading short term, take profit somewhere at these levels, right? That's where sellers would come in. We actually did reverse and we moved higher to all of these levels. So at any point you could have taken profits there, or if you just want to actually hold for a longer piece of price action, you can do that. As you can see, trend lines can be used to identify price levels and areas to trade, either within trends or to identify reversals. However, they're just one aspect of TA. There are many other aspects, for example, chart patterns like consolidations or wedges, support and resistance that can also help us and should be used as well. I'll leave some free videos on how to use those down in the description. If you want a deposit bonus on the crypto exchange I use, that's down in the description as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.